This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Nicholas Smith of SMU. Nicholas, thank you for joining us.
How are you doing, Hall? Thank you.
I'm doing good. Thanks for joining us. And I always like to start off with, how do you get into early stage investing and what do you find interesting about it?
Well, for me, the angel investment groups is where I found my way in. Pretty well have a nice investor community here in Dallas. And the angel investment experience is the clubs themselves and having the events where you'd have the roadshow folks come through. And we did a couple of things out in Breakers, went to the Chinese Business Summit out in Las Vegas. And so just a fly on the wall for a lot of the meetings.
And so what did you see the interest was in those groups for startup investing? What were investors going after and what were they not going after? What did you take away as the objective viewer of that scene?
The objective viewer, frankly, there was a lot of difficulty on the part of the investor to sort through, can I trust these folks? Is their business legitimate? And so the due diligence part of it, I think, was probably the most important. And then I think because of that, especially the independent investors that are invested in, not as a part of a company, they're really invested in their own personal funds or maybe their family's funds. They, by nature, are very protective and they sort of build alliances with other investors that they feel are intelligent and prudent on their investments and maybe have had some success. So over time, you find that the relationships sort of deepen and they want to see you around a little bit and they want to maybe talk to some people who know you. And it's a relationship building process is what I observed.
And those who did it best, entrepreneurs building the relationship with the investor or vice versa, what were they doing to build that relationship?
I think the key for those folks was, number one, knowing their business backwards and forwards, I would say was number one, because if you don't come across as intelligent, part of that point is you've got to be able to stand in front of a group of people who are going to scrutinize you and sort of tell the narrative, get financial when it's time to get financial, try not to bore people because they're probably going to see 10 of these, be here all day, and then be sociable enough to sort of basically transition into the networking side of it. Maybe in the evening you're having a glass of wine or something like that. You still have to be able to further the relationship while also firming up people on the details of the financials and what the business is about and things like that.
What were the real deal killers when somebody's pitching? What did somebody say that just kills the deal right there on the spot and everybody's just polite till the end after that? What did you find?
Yeah, so it's probably the simple stuff. It's interesting when Shark Tank came along, it's like, it's kind of comical because it's a show, but they hit on some of the same points. What do you hear Mark Cuban ask every single time? How'd you get to that valuation, right? Like, where are you coming up with these numbers? And how much of this is based on what you guys are actually doing and how much of this is projection? And then really sort of like seeing how much they know about the models that they're presenting. And so,
yeah, I always say valuation, a negotiation, not a number. And no matter what number you put out there, the investor is always going to push back on it. And it seems to be the key is the ability to defend it and articulate the values in your business. And those who can do that stand their ground. Those who can't do that are usually falling back.
Yes, definitely.
And so for those who did well, what did they do well that really impressed you? Those who presented and got to that next level of building relationships and perhaps follow-up meetings. What was the one or two things you saw that really stood out?
Well, probably you can see when the connection's happening in the room. You can see sort of the nods and the looks from the folks in the room who are probably some of the more aggressive investors that it's sort of cascade. I doubt that any of these guys ever got just one investment. So if you're going to be successful, you're probably going to sort of tap into a crowd of people who saw the same thing where they feel comfortable for the same reasons. And what I saw that to be was, number one, charisma helps. It's really kind of sad. Sometimes it could be a great business, but if it doesn't come through, if they don't trust that you have the ability to continue to go out and sell, to basically get more investment, to take it to the next level, then as good as it is, it's still a non-starter because they're not going to run your business. They want to give you money and they don't want to participate and want you to do it. So I would say that if they get the confidence in you that you are able to continue and be successful, that's the judgment they're making, and it's sort of a qualitative judgment, I'd say, before you ever actually meet them in person.
And what kind of questions did the investors ask? Did you hear better questions than from some than others? And what were the most interesting questions you heard?
Some of the more interesting questions were around, I guess, the business itself, what they saw in the marketplace. So some of that seems to be what you think about the future. Is it what I think about the future, or is it innovative? Is it something that I haven't considered? So let me see if we have the same perspective, sort of gauging that perspective from maybe you have a good business idea and it's going well, but are you going to run into a buzzsaw because something in the market's going to change? And are you aware of it?
And so when you saw a connection happening, what happened after that? Did people meet together in the networking, or what transpires afterwards that really says, hey, this is going to the next level?
Typically you would see those folks gather. The networking is designed for that. I think, some of it's more structured than others. The few groups that was around, they like it to be a little bit informal, so that there's opportunity for, the chemistry to happen. And then those folks they'll hang around and have dinner, or maybe they'll schedule something for the following day, or depends on if they're in town or out of town. That's the other thing. You have sometimes folks that are doing a road show, so they're going to be here. We're going to be here for 48 hours or 72 hours. So we have this time available, and the investors know that that's the case. So if they're traveling, then probably something happens that evening, whether it's going out to dinner, arranging to have maybe attorneys come to dinner. But I think it would probably be an extension of the social communication that evening and interaction, and then probably a scheduled follow-on. So then you're going to have we're going to come to your office, or you're going to come to our office, depending on what kind of business it is. And then we're going to peel back the onion a little bit to see if it passes the diligence phase.
So it sounds like you had a good experience there. What else in the last few minutes that we have here that we should cover that we haven't?
I think what we should cover, since you guys have an interest in, as many of us do, in what's happening in the ICO market. I just recently read the FDIC 2017 annual report, and I would say that now probably more than ever, it's important to understand what's happening with regulation before you get involved, or even our young entrepreneurs who are going to spend a considerable amount of their talent and time pursuing these ambitions, that they need to make sure that they're operating within the guidelines. And we've got the FDIC, which oversees the banking system, are right now putting procedures and new teams and technology in place to close loopholes and prevent banking reserve issues. And so they're going to get more hands-on, and there's a lot of specifics that we don't have time to go into, but I'd say make sure that you're on the right side of those regulations and staying in tune with what's happening with new policy, for sure.
Well, it seems like the SEC's made it clear that all these tokens and ICOs are securities, no matter what you might call it. They're going to call it a security, and in the end, their opinion counts and no one else's does. So it seems like it's becoming clear you just have to run a Reg D offering, a Reg A plus, and it's just going to be like it has been before, and there is no getting around that. It used to be people would argue that their token is utility and it really isn't a security. It kind of falls hollow when people can take that token and go put it on an exchange and sell it for a gain. And I think that's how the SEC looks at it, is it's not what you intended your token to be, but what a user can actually do with it. And if they can treat it like a security, well, then it's a security. So if it looks like a duck, quacks like a duck, well, it's a duck. And if it looks like a security and is treated like a security, well, then it's a security. And so it seems like the world is starting to come to realize that and come to grips with that. And I think we'll see a lot more clarity going forward, because we're not in that quarter like Q4 was, where everybody's just trying to get out of the security thing as best they can, but in the end realizing they can't. Okay, well, it's back to business as usual in some ways. So I think we'll see it settle down a little bit from that point of view, because we're going to be using the usual laws. But that's a good point.
Well, I would like to mention one other thing, since you have a good point as well, is that what we end up doing, because we are trying to put in regulation and handle this like we would any other part of our industry or economy, what you're seeing now is the fence go up. And now you'll have some of these companies, which maybe they are fraudulent, maybe they're not, but they're going to go outside the U.S. And recently, one of them was like EOS, who was one of the folks that worked on part of the Bitcoin project, part of the Ethereum project. And either way, he's not allowing American investors. In fact, several companies have put up notices where they will not sell or allow American investors to participate at all, because it exposes them to our American regulations. So for good or bad, there may be that small percentage where it is a negative to American investors. It'll be interesting to see how that plays out.
Well, that's great. Well, I appreciate you sharing time with us today. What's the best way for users to get back in touch with you?
Shoot me an email, nicholas.smith.me@gmail.com, and appreciate your time and good luck to you guys.
Well, great. Well, thanks for sharing your time. We'll put this up on the website, and we'll get back in touch with you for a follow-on interview in the future. And appreciate your sharing your thoughts.
Okay, thanks all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.